A short and positive week on Wall Street.
Emotion has no place in your investments, so how do you know what news actually matters? Hi, I'm Eric, and in the next few minutes, we're going to forget the headlines and focus on the facts. Here's what really happened last week.
All three major U.S. equity benchmarks posted slight gains over last week's short four-day trading week, adding to the extended rally that began after Christmas. At Friday's close, the S&P 500 was up 7.2% month over month, and the Dow Jones Industrials Average was on a 5-week winning streak. Friday's sudden agreement between President Trump and Democratic congressional leaders to end the partial federal government shutdown was but one positive factor influencing stocks. Some key earnings announcements surprised to the upside. China's government said that it would inject $37 billion worth of liquidity into its money markets, and investors heard that the Fed might be thinking of wrapping up the unwinding of its balance sheet sooner rather than later. Seldom do existing home sales fall 6.4% in a month, but that is what happened during the month of December. National Association of Realtors economist Lawrence Yun called the drop a reflection of consumer search processes and contract signing activity in previous months when mortgage rates were higher than today, and noted that the housing market could be poised for a spring rebound. Year over year, the National Association of Realtors noted resales were down 10.3%. The median existing home sale price was $253,600 last month, up 2.9% from December of 2017. On Friday, the Wall Street Journal stated the Federal Reserve policymakers are reportedly considering an end date for the unwinding of the central bank's huge bond portfolio. Investors will, no doubt, scrutinize the Federal Open Market Committee's January 30th monetary policy statement for any intimations about this. In gradually shrinking its balance sheet over the last 15 months, the Fed has affected the level of liquidity within the financial markets. The Conference Board's monthly index of leading indicators descended 0.1 of a point during the month of December. A month earlier, the gauge rose 0.2%. In a note accompanying the release of the data, the CB said that this might be a hint that the economy may decelerate towards 2% growth by the end of 2019. All right, looking ahead at this week, today, Monday, the IRS, the Internal Revenue Service, begins accepting 2018 individual tax returns. Tomorrow, Tuesday, the Conference Board releases its January Consumer Confidence Index. The Federal Reserve issues its latest policy statement on Wednesday with a press conference afterwards. ADP presents its January payrolls report, and the National Association of Realtors offers its latest pending home sales index. On Thursday, December consumer spending numbers are out, and Friday, Wall Street interprets January jobs data, the final January University of Michigan Consumer Sentiment Index, and ISM's newest manufacturing PMI to wrap up the week.
Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. If you'd prefer to read the transcript each week, you can subscribe to that at www.erichagen.pro. Also, if you'd like to get financially organized, head on over to nocostfinancialdashboard.com and take control of your financial future. Lastly, if you want to find out if you're invested right, visit getinvestedright.com right now. Thank you again for your time today. I'll look for you next week.